Good evening, this is Duane Lowry for the DPP Grain Desk on Sunday, March 17th. Probably a few things of noteworthiness to talk about here tonight. First, we'll talk about weather, which probably really isn't that noteworthy, but it's part of the routine for Sunday night, so we need to discuss it. U.S. weather, Midwest weather, any precip in the Midwest is going to favor southern, eastern areas. Northwestern areas is going to be relatively dry pattern. U.S. Plains moisture opportunities exist later this week in the southern U.S. Plains and stretching on into the Delta. Overall pattern in the plains still remains drier than desired in some locations. Overall pattern in the northwestern Midwest still drier than desired. Some soil moisture improvements in other areas. We're also getting to the point now with cool temperatures and snow still on the ground and things of this nature that causing traders to begin to ponder later than desired spring work schedules. I think it's a little premature in the season to talk about it, but yet we talk about it early every year, so I guess it's just part of the equation. I think it's important that when you look at the grain market here, you remember that the corn market is just finished liquidating bulls, getting people to give up on bullish positions over the last couple of weeks, and we've had a good recovery from the bottom, but we've recovered and strengthened prices without a lot of people on board. Not a lot of people have been long corn on this move. They've all gotten out over the last 2 or 3 or 4 weeks. Trader sentiment has turned bearish. You probably got some shorts in new crop corn, thinking the market can't rally. So the profile of the market is pretty clean. That leaves the opportunity for quite a bit of buying energy to still come into the trade. You're at the highest futures prices we've had in corn in more than a month. And we've got next week on the Thursday the 28th, that's Thursday of next week, USDA will offer quarterly stocks estimates. That's has a chance of being quite bullish on corn, probably be bullish on beans. I think there's going to be greater focus on that here this week. That should keep bears away. That should make bears nervous. So I think that opens the door for some short covering opportunity. I think it also creates a situation where the futures market is finally responding to cash market signals that have been in place for weeks, if not months, about the need to ration old crop U.S. corn supplies. And I think that sets the stage where with short-term technicals, which right now I think are very conducive to generating some upward price movement, that we might see some upside acceleration this week in the corn. I think that's probably also true in the wheat. Soybean market's been trading oppositely of corn and wheat for the last several days. That's caused a lot of liquidation activity in beans, as beans has basically broken 60 cents for no real apparent reason and caught the trade largely off guard in pretty volatile, erratic, and I would argue irrational trading activity. Probably been going on for 2 or 3 weeks, up and down in both directions. So I think there's good signs that Friday's weakness in beans was near the end of that liquidation process. Maybe Friday was a culmination event, I'm not sure. As far as the opening calls here tonight, I think there's some default setting type of expectations for the markets to be a little weaker. I'm not sure that's correct, but I think that's the type of default setting. People looking at wheat and corn, thinking that the market's rallied enough to do for a setback. People looking at beans, seeing how poorly they perform, and thinking there may be some follow-through. And I think that type of thinking is why you got, some expectation that we'll start a little lower tonight, even though I don't think there's any particular reason for that to occur. As far as the wheat and corn having relatively shallow corrections, I think that is true. I think it is understandable that people think that maybe corn and wheat could see some corrective weakness here, spend a little more time correcting the recent gains. I understand the logic behind that, but I don't think that's what's going to happen. If you've watched it closely, there's been some intraday, we had a couple of days of some notable intraday weakness in corn and wheat, and I think that may be all we're going to get. I think the technical conditions have a much better chance of creating some upside acceleration than they have of any prolonged weakness. And I think with the report due out next week and the focus on that, I think that's going to give you some buying energy. So I'm not expecting much weakness tonight or this week in general. And I think the question is how much upside are we going to get. As far as beans are concerned, it's the same situation. Technical conditions would suggest that there should be limited selling energy left to hit the market. I'm not sure there's any fundamental news that you can confidently say is attached to the hip of the grain market or the soybean market on intraday price swings. Over the last 2 or 3 weeks, we've had some very strange and volatile and erratic price moves in both directions, a lot of large overlapping swings in trade. 1 minute they're talking about large South American production, next minute they're talking about concerns of poor yields in South America on beans. So, I mean, I think you throw it all out the window and call it garbage. I don't think the market's trading any of it. I think we're trading price action. I think the technicals have done as good a job as anything at predicting short-term price direction, and right now I don't think that the technicals are suggesting there's much weakness here. So I think there's good chance for a price recovery in everything this week. Now, outside of the grains, I think there's something that needs to be discussed. Over the weekend, Cyprus, which is scheduled to have a bank holiday on Monday, there was basically a decision made Saturday to have all bank deposits in Cyprus taxed, depending on the level of money in the account, at different rates ranging from 6 to 10%, give or take. Which basically means if you've got money in a Cyprus bank account, you've just been hit with a new tax or a levy. You could call it a haircut. You could call it anything you want. But that type of action has been attached to Cyprus getting the next bailout funds from the IMF. And they're supposed to vote on that. They're supposed to vote on it today. Now that vote's been delayed till Monday. I'm not exactly sure of all the details on this particular matter, but the initial reactions in the marketplace will be one of uncertainty and nervousness, wondering if there'll be run on the banks in Cyprus, and then how far that spreads over to Europe. And European countries, especially those that are in the most troubled state of affairs economically, our depositors in those countries going to say, well, wait a minute, if you can just come into Cyprus and take a 6 to 10% haircut off of all deposits, which basically becomes a new tax, who's to say that you can't do that to us? Now, Cyprus is going to vote on this, and their legislators have to approve it, but between power and money, they can usually get the kind of votes that they need for this type of action. And even if they don't pass it, there's going to be an awful lot of lack of confidence. So the results from that, in a very simpleton way, probably is a stronger U.S. dollar, which the dollar has been trending higher for some time, and certainly capable of more strength and a more prolonged trend higher, and just had a nice correction in the last day or two in the dollar index, so it may very well be poised for strength tonight. A stronger dollar and the uncertainty about Europe, whatever, certainly could be negative to the U.S. stock indexes. It might be a friendly gold, I'm not sure. I think the focus is on the dollar strength, but we'll see. Maybe that's a little bit bearish crude, not sure of that either, but it's a possibility. So there's going to be some uncertainty in these outside markets. Now, to the extent that this uncertainty in the outside markets could possibly spill over and create some sort of knee-jerk bearish sentiment in the grains, I would totally not embrace that. I think any such early weakness based off of what's going on in Cyprus, I think would be completely wrong to join that and embrace that. I think it has no real impact on the grain trade whatsoever, but it is something that's worth mentioning here. So for the DPP grain desk, this has been Duane Lowry.